Good morning, everyone, and you're all very welcome to today's market update in the videos. So we've had a very turbulent 24 hours or so in the markets off the back of yesterday's CPI. We said it on Monday, we said it yesterday, there was going to be volatility. And of course, we got that. I mentioned it in passing earlier in the week, this buy the rumor, sell the fact scenario. Markets priced in a better than expected inflation figure. When we got that clear disappointment, the markets puked and we had that massive sell-off last night. Looking at some of the numbers overnight, some stark realities of the situation pretty much within these equity markets of when they change. Yesterday was the worst performing day in the stock markets in 2022 with the volatility that was seen. Only 3 stocks in the S&P 500 finished positive on the day. All 497 all finished negative, with each of the 11 sectors averaging over a 2% decline or more yesterday. Dow Jones finished the day almost 4% down. S&P 500 finished the day 4.3% down, and the Nasdaq finished well over 5% down on the day. So massive movements yesterday in the opposite direction. Now, again, brought about the very much the impulsive catalyst was off the CPI print, but of course we were seeing that price action coming in, that massive roar in the markets, a scramble for selling bias, and we did see a number of hedge funds and institutional funds getting bitten quite heavily yesterday off the back of that higher than expected CPIs. Markets were looking for a weaker print off the commentary by Treasury Secretary Yellen, who did comment previously in recent days and weeks that she was expecting a weaker than expected inflation print off the back of those lower than expected energy prices and those lower oil markets as well as a result. So that didn't play out. That didn't actually happen, which of course we saw that clear impulsive move in the markets accordingly. Now, with that aside, let's look at yesterday's data. Okay, so yesterday's data, the CPIs now, of course, came in, albeit lower than the previous number. So the previous number was 8.5. This number yesterday was 8.3 year on year. However, the guidance was 8.1%, and markets were looking for a 7 print. Didn't happen. Disappointment came in way higher than people had predicted. And of course, still, now, albeit it's still coming down, but not at the pace that market participants are expecting. Changing sentiment yesterday changed from the Fed debating whether it's going to be 50 or 75 basis points next week for the next Fed interest rate to 75 to 100. Now, federal fund rates have been pricing in an 18% chance of a 100 basis point increase in September next week. Now, I think market participants are very much gearing towards another 75, and I think pretty much 75 basis points, 0.75% increase is pretty much dialed in now next week. So that's what the markets are expecting. I suppose in the core CPIs with wage inflation and the likes of that, we're seeing that obviously tick up. So the core CPI has actually gotten worse. So it was 5.9. It was marginally expected to be higher by 6.1. Of course, we broke through that 6.1 with a 6.3 print. So it's 0.4% higher on the CPI year on year. And on the month to month, we're 0.3% higher as well. So that's basically saying that if we had 12 months of 0.3% incremental increases or kind of stationary movements, we would have 3.6% by the end of the year. Of course, 6%, if that was to average out over a yearly basis, that would be much higher at 7.2%, which is not where the Fed and the markets want to see these inflation prints. These want to see the inflation levels coming all the way back down into kind of 6s, 5s, and then kind of into the lower kind of 2s, mid 2s, low 3s next year. But at this moment in time, still a lot of work still to do in that regard. Now, this morning, moving our attention back to the UK this morning, we did have the UK CPIs. Okay, so the UK CPIs this morning, core CPIs month on month, again, massively out of control. 0.8% came in as expected. And of course, the year on year core CPI, which factors in the likes of wage inflation, just marginally higher at 6.3%. However, the other inflation metrics, looking at the CPI year on year, so that's not just the core, it's kind of inclusive of everything. 10.1% was the previous, 10.2% was the consensus, so they were looking for a marginal increase this morning, and we actually came in under 10. So that's starting to see a little bit of positivity, starting to see, are we getting a little bit of top on UK inflation at this 10% level? Initially, last month, and this month would start to suggest so, but we'd have to be looking at kind of October into the winter months to see if there's any sort of continuation in, I suppose, that top forming, and of course that gradual decline accordingly. Now, of course, still very, very early to tell, but we are topping out initially at this 10% level. So that then brings us back into the chart. That brings us back into the price action. What happened yesterday? Well, if we look at the price action, as I said at the start, market's very much looking for that reactionary continuation in selling price action. But of course, that didn't happen. Okay, so this is where we were mid-August into the end of August. We had that impulsive move into the beginning of September, taking the highs, flooded liquidity into 110.50 on the DXY. Then we got that massive sell-off in the last 3 or 4 days since last Thursday into the off the back of the weaker CPI in China on Friday, and yesterday and Monday, the price action yesterday morning was quite positive. We're sitting at 108. So the dollar weakness was still continuing to abate. We're still seeing that optimism in the stock markets. But then we got that rapid reversal. We got that rapid shift in the upside. Now, structurally speaking, from my perspective, from a smart money area, we had consolidation. We took the highs. We took the lows. We flagged all the way back up into this liquidity area here at 110. And it looks like now that we could potentially start to see, even though this was an impulsive move yesterday off the fundamentals, the existing trend, will it continue playing out? Will we start to see further declines? Let's wait and see. From a smart money perspective, that looks to be the case. When we reciprocate that viewpoint back into the euros, euro dollar, back into the cable, just choosing these two FX pairs just to kind of reciprocate that, we had the same scenario. Okay, so we had consolidation, we had taking of the lows, we had that impulse ahead of yesterday's CPI move. We had the impulse yesterday flagging back into the discount zone, flagging back into this area, and markets look like they're going to try and grind higher. So initially speaking, quite positive that there might be some sort of recovery coming here, particularly in the dollar markets and the money markets. But at this moment in time, let's just wait and see. We are kind of staggering here around 61.8 on the 4 hour. Now, if you isolate the price action on the 1 hours, you will find a little bottom coming through here off the 71 or 707 fib retracement level, and price action is trying to break through the 61.8. So if we're breaking through the 61.8, that's going to give a little bit of positivity that markets might recover. Markets might recover back into this 101 level. And thus, that's what I would be kind of pointing towards now if those markets continue that way. It looks like a lot of the selling yesterday has been exacerbated. Short-term profit taking looks to be completed in a lot of asset classes. But now let's see, does that materialize, or is this going to be kind of a short-term dead cat bounce and then we see another wave of selling? That's, I think, the ultimate risk here, is that this recovery is only short-term and short-lived, and we see that another wave of bearish optimism, or bearish sentiment, should I say, hitting the markets, and of course then seeing that even elongated and further declines accordingly. All right, so that's exactly where we are at this moment in time. Cable, however, very, very similar viewpoint. 1 hour charts and 4 hour charts, very, very similar. So if you start off in the higher time frames in the cable, just going full screen for a second, we had that consolidation, took the lows, massive ascension to the upside, profit taking. Of course, smart money came back in. Yesterday's CPI print was the catalyst, and of course, this liquidity area at 115, the liquidity candle here, very much recovering here off this 115 handle, and we're starting to see initial impulses. Now, again, when you go to the 1 hour, we've broken through this consolidation. So we've got that short-term bottom, we've flagged up, and even now, poignantly, we are creating a short-term top. So from my perspective now, the larger move on the smart money play has been completed, in my opinion. When we look at the shorter 30-minute consolidation here, we've obviously got the bottom, we've broken structure, looking to see if there's kind of one kind of more pullback, reaffirming this kind of consolidation zone here, and if so, then looking for that modest recovery accordingly. That's kind of what I'm looking at myself. It looks that way within the smart money, that's kind of what's developing at the minute in time. Whether that plays out or not through the day, let's just wait and see. It's going to be a long day today. We're kind of only getting into the business end of the week, because traditionally speaking, Wednesdays and Thursdays tend to be the busier days trading wise. Now this week, probably a bit of an anomaly off the back of the CPIs, but let's wait and see if there is any sort of recovery, in the markets off the back of yesterday's heavy selling. And that's exactly what I'll be looking at. Now, again, taking that into some of the other markets like gold, we're seeing the same thing. We had that bottom structure, 4 hour mitigation over here. All that was kind of manipulated, and it was ultimately mitigated as well. We got the bottom forming through, short-term higher highs, higher lows, 3-wave structure. price action comes down for another bat into this 1695, 1700 level. Now, structurally speaking, we are holding 17s at the minute. I was looking to see was there any sort of mitigation of these liquidity areas down here at 1695, 1696. At this moment in time, just holding above it. So it might just get there, considering that we had short-term bottom. Price action did try and break through, try and engulf this wick. But we seem to be holding up so far this morning. So I would kind of say, wait and see how does the price action develop through the course of the day. If those confirmation like your 4-hour closures and your 1-hour closures are kind of reaffirming kind of some sort of strength, that might be the early sign for kind of getting that little bit of recovery and softer moves ahead of yesterday's rapid sell-off as well. Oil markets, again, purely because of the volatility, this is something that I kind of wanted to share. Daily candles, daily price action, still very, very bearish overall. So let me just remove that for a second. Daily order flow, very much bearish from those peaks way back in I suppose, May and June. Consecutive lows and highs being confirmed. We even had our last lower high at the end of August with that rapid breakthrough into the low 80s. Of course, at which point in time now over the last 3 or 4 days, we are seeing that little bit of a recovery. So from my perspective, again, on the oil markets, we are kind of in fib retracement levels from the optical price action scenarios here. But I suppose up here, kind of 61.8s, ideally would be kind of the areas that I'd be looking at, kind of 91, 92-ish, to see if there's any sort of rejection or reaction off this zone up here. Yeah, I suppose if you're trading the ultra short-term trading time frames, and you were looking at this maybe from a 15-minute or a 30-minute angle, you would see that we are very much in shorter term levels liquidity here, focusing on just this portion of the price action accordingly. But there is the risk that price action could break through this, try and take out the liquidity here by making a short-term impulse up into this level up here. So that's, I would say both scenarios are probably valid, but with the latter, just being kind of aware that price action at the minute could create that liquidity hunt, could try and stop liquidity, could try and come up here, and then maybe give a little bit more of a cleaner move. At this moment in time, we are holding above 86, which is obviously quite positive for those upside moves. So let's just wait and see, regardless of whichever viewpoint you have there if you're trading the oil markets. So indices, again, very, very clear. So I'm just going to mute that for a second. We can see here very, very broadly, markets, again, this massive puke run up yesterday, very, very clear bearish price action. Then we get that recovery into what was expected, a weaker CPI. Then, of course, that didn't deliver, all the way back down into this order block area down here. Markets held up very firm overnight, holding up initially. However, are we going to see that continuation today, continuation and selling off the back of that CPIs? Fundamentals are led the way very much yesterday afternoon with that straight line decline, albeit now we are starting to see some consolidation. So this area down here around 3900, I think it's going to be structurally important, 3900, 3920, to see, does this area hold up today? Now, initially overnight, it has. We've got initial impulse this morning, which is confirmed. But again, looking to see if there's any sort of relief rally back into this short-term consolidation. So we do have a 30-minute consolidation here accordingly. So if I just draw this out for those who maybe trade shorter time frames, try and cover all our bases. We do have a 30-minute consolidation here, which is played out very, very nicely. We've had that impulse to the upside. I would now look to see, is there any sort of relief rally back into this region? If so, do we hold above it? If we come down and reject it, then you're going to probably see a little bit of an index recovery across the board. And again, similar in the NASDAQ. NASDAQ also very, very clean, came into this area of liquidity here. Massive run up, massive pullback, undoing all of this buying impetus that we saw over the last 3 or 4 days. And now we're seeing a little bit of a recovery again. So just wait and see. I think the bias here is, given how far the markets have sold off yesterday, it would allow for kind of a shorter, albeit maybe a shorter term recovery, but would give for a recovery nonetheless. Now, whether that plays out into the open today, because we can see market dynamics are changing very, very quickly from session to session. Bias is changing, sentiment is changing quite quickly, particularly when you look at yesterday between 1 and 2 o'clock. We were very, very bullish, very, very optimistic, and then all of a sudden by the open, markets couldn't sell quick enough. Markets couldn't get into the orders, the selling orders quick enough. And I have seen on some retail trading platforms the liquidity issues, freezing, orders not being filled, massive slippage. And of course, when you work with subprime liquidity providers like ourselves, with liquidity being offered and spreads and latency, obviously we minimize that as much as possible as well. So take that as maybe a word of advice as well. So Dow Jones, similar scenario, has come all the way down, has mitigated this area here to the point you can even see come into the bottom of the range. We have seen a modest 200-point recovery, but again, similar to the Nasdaq, similar to the S&Ps, we've short-term consolidation on both, particularly on the S&Ps leading the way, Nasdaq as well, S&Ps, all three identical. Okay, given that we've broken structure to the upside, see if there's any sort of short-term recovery back into the order block zone, back off these levels. So from my perspective, 31,285 is the area of interest. So this level here is what I'm watching specifically this morning. Nasdaq around 12,050. Okay, so this area as well, 12,050-ish area. I'm just going to ring that up ever so slightly. And of course, S&Ps, this area as well, 39, which is coming in at 39.38, I believe, as well, another area of interest there as well. So those areas is what I'm looking at to see if they hold up. If they hold up, that would give kind of short-term buying counter trend opportunities, but also depends on your strategy. Are you trend trading? Are you counter trend trading? And then obviously factoring in the time frame approach as well. But there's two to look out for. S&Ps yesterday, this is how the smart money order blocks works that I kind of trade myself. Daily move down here was mitigated. We got that consolidation between 71.75 and 7200. We then got that massive upswing into the CPIs. 4-hour liquidity area order block zone was mitigated to the T. So we got this level rejected to the T, didn't break it above it, didn't close above it, rejected where these wicks are. And of course, 7,500 was the start of the selling, rejected it very quickly. Bearish engulfing, and the price action since continued lower all the way back into kind of 73.20. So there was a 180-point sell-off yesterday in the FTSE, which in its own entirety, massive moves. You're talking about a 3% sell-off or so in the FTSE. So factoring that into consideration, very, very bearish at the minute, even there as well. We are seeing a little bit of a bottom. We are mid-range though. The only thing is comparison with the other three is the U.S. markets is we're actually at a set of lows. So we've mitigated those. FTSE on the other hand is very much mid-range. So there is the bias that, yeah, we could find a short-term recovery here, creating like a dead cat bounce, short-term lower high, and then seeing that further elevation to the downside in terms of bearish price action. But from a market participation perspective, let's just wait and see. Particularly then with the DAX, when we look at the European markets as well, DAX was not immune to the market sell-off yesterday. We saw that puke and selling bias across the board. It was quite bullish. We were up here kind of 13.5s, 13.6. I had the idea that if we got a little bit higher, we could kind of mitigate this area of interest up here. But of course, that failed with that weaker CPI, or stronger CPI, should I say, and weaker market move yesterday. And of course, we broke back through this short-term area of price action here around 13.3, 350. And we've continued to descend all the way into these lows down here at 13,000. So 13,000-ish or just above it has held this short-term area of interest. Again, like the US-based indices, short-term consolidation. We have got an initial impulse to the upside. We have now wait and see, will we flag back and create a short-term flagging maybe impulse back into this 13,350, 400 level. That's what I'm looking at myself personally. But of course, let's wait and see how these things play out, because of course it's very, these viewpoints are very interpersonal and can be taken in different concepts by different types of traders. So I suppose with anything, I think yesterday has proven that risk management is ultimately so important, because if you don't employ risk, particularly around these very, very volatile news events like CPIs, which will move markets from a catalyst or catalytic perspective, then it could be really difficult to manage the risk, particularly when you have constraints. So when you have to abide by certain risk measures, then you kind of need to be aware of that to make sure that you're not getting adversely affected by that. All right. So that's pretty much where we are for this week, everyone. So personally speaking, I'll be just watching the price action today, see if there's any sort of reaction off of yesterday's selling in both directions, and then kind of allowing the price action to breathe, allowing those risk metrics, staying within that, and then of course watching the price action for the rest of the week. So we will be back later in the week with more updates just to see how the price action's unfolding off the back of this morning's video, and of course then seeing and putting a kind of a plan in place for the rest of the week as well. All right, that's pretty much it, everyone. Have a great week, and we'll see you all later.